Hey, what's up, everyone? This is NYU grad recording this after market hours on July 6th. This is the second episode of this podcast. I want to welcome you guys back. And if you're a first time listener, I want to welcome you to the NYU grad mini podcast called Daily Grind, where I kind of walk you through the forest and the trees in under hopefully 15 minutes. Yesterday, my maiden voyage or episode one, not much to really talk about. It was a pretty boring day, but man, hope you guys are having fun today. Thursday, July 6th. I'll be publishing this most likely late tonight or your morning. But wow, what a difference the day makes. Where do I start here? So, taking a look overnight, like even at I would say 4 a.m. New York. By the way, I am recording this from the greatest effing city, and that is a double entendre because it's a love hate relationship for me, but that's for another day. Around 4:18 a.m. New York, the 10-year and the 2-year were just ramping overnight. I think the 10-year was at like 3.9% after rising over 2 basis points, and the 2-year was up more than 2 basis points to 4.9743. Um, so already the selling had accelerated overnight. Wednesday, early while everyone was sleeping, or while London and APAC were open for business, where the Dow was down over 180 points, um, roughly about 0.5%. S&P was also down about 0.5% by 6 a.m. New York time. And then the ADP jobs numbers came out this morning at 8:30, and prior to market open, we were down anywhere from 250 to 280 around that portion. It was jumping up and down, so it looked to be a pretty risk-off day. What really stuck out to me was initially there was a sell-off in gold. I'm sorry, a sell-off in Bitcoin, like just Bitcoin and Ethereum overnight, and it just looked like it was going to be a risk-off day, as I mentioned. Gold was showing some signs of life. Dollar was kind of going back and forth, and this can all be kind of tied to yields, right? Like, because typically you have currencies, when you look at currencies versus interest rates, are very tied together in pairs, and then you have counter pairs when you look at like the US dollar versus yen, or US dollar versus the euro, or the British pounds, etc. But typically, as interest rates rise, in the US especially, the US dollar will also rise in sentiment. So it looked like rates were going up, risk was coming off, a huge sell off was starting. But to kind of summarize the day, I would say the Bulls fought really hard. And I want to preface and say it's not really, if you're a bull and you're kind of buying the dip um, blindly, you're not really impacting the market, so to speak, because we are still captive to, you know, Amazon, Google, Meta, Nvidia, Tesla, Amazon, Microsoft. Those seven companies are over 50% of the S&P 500 weight. So those are the shares that were very weak at the open, when we were down like 300 plus Dow points, and it just looked like a massive sell-off. But somewhere around 11 o'clock or 11:30, before lunchtime, it just made a U-turn, and all these large mega cap tech names started to rise. And we had companies like Microsoft and Apple turn green. So not only did they fight back during the day, they went positive. And then you look at Meta, Nvidia, they also fought back. I mean, almost to even. Another sector that fought back really hard today with the sell off was financials. If you look at XLF or even like JP Morgan, right? I always say, like, there can be no stock market crash without JP Morgan's selling off. Like, it's the most important bank out there next to potentially Goldman and BlackRock operationally, globally. Um, some other things that really stuck out, that was right about lunchtime, the turnaround. It was, it felt like 105 degrees in New York. It was very muggy. So I ordered Sweet Green for lunch, and I was just looking at their stock, and they just got a simple upgrade from an analyst, and it was up 17. Well, it was up 17 plus percent during the day. It closed up 15%, so off the high. But when you look at, you know, just from last Friday, from the July 4th break, it's up 50%, 50 for salads. You would think that the new hot IPO of Kava would be stronger, but I guess everyone's eating healthy, and that's great. That's a great thing. I do frequent Sweet Green just to stay healthy, or just so I can eat poorly for dinner. During the day, I thought the VIX was going to get going. The VIX, I've been watching it. I never share my trades or my positions on this podcast. This is just for learning and to entertainment and to share ideas. But I really thought the VIX was starting to make a move. I was like, oh, wow, look, maybe I should dip my toes here in some volatility equities. And lo and behold, after lunch, it just started to vomit and just kind of go back down. It lost most of the intraday gains. At one point, some of the VIX shares and 1.5 and 2x VIX shares were up 30% plus, and they closed even or even barely with a profit or green. The 10-year is still looking very bullish. The 30-year mortgage rates are very high. And I'll try to focus on this later on, probably not today, and maybe do a separate podcast or article. But, this is going to be a headwind for real estate. And eventually, either rates have to fall or prices have to fall. And, historically, when you look at the Fed pivots and a market correction eventually that could happen, it seems science fiction at this point. You'll see rates decline with QE, and then you'll see kind of deflationary pressures where you see prices of goods as well as homes fall in sentiment, because not because hey, interest rates are cheaper, I can go buy a house, but more, hey, we're in a recession, they had to cut rates and do QE, we're all kind of in a recession, and typically they'll admit that probably too late. So those are the things that look really strong today. Sweet Green up big, VIX was up big, but kind of lost and gave some of that back. What looks weak? I posted something earlier on Crocs. Today it was kind of a non-event, but when you look at the 6-month or wider picture of Crocs, the sandal and shoe wear company, doesn't look too strong. Nike, same thing. It's kind of hanging on an edge. But when you take a look at the macro, the majority of the large mega cap tech and anything that is in a bullish impulse right now, they're all trading above the 50-day MA. So right now, that bullish impulse is still alive. We are all on that same spaceship right now that's being flown by Amazon, Google, Meta, Nvidia, and Tesla, and Microsoft. Um, Man, if those ever sell off, that's when you know that something is up. But right now, the instructions from whoever is holding the keys is saying, look, stay the course, support this market with those 7 horsemen. One thing you want to note is on the ES, just draw a horizontal line across 3,900 or like the March lows. Until we break that line, we're cruising. We're cruising at 30,000 feet, buying all the dips, and there's just not a care in the world. But those are just kind of high level. Tomorrow morning, we're going to have more employment slash unemployment data coming out with the U.S. non-farm payrolls at 8:30. And hourly wages are also coming out at 8:30. So be on the lookout for that. Tomorrow is Friday. I suspect it'll be light trading unless some news event comes out until next week when people are back from their holidays. But I appreciate you again for spending this brief time with me on this podcast. Please share it. I'm trying to grow the subscribers for both the Substack as well as the podcast. It's also available on Apple iTunes as well as many other podcasting platforms. So thank you again. This is NYU Grad signing off. Have a wonderful evening if you're listening to this on Thursday. And if you're listening to it on Friday morning, good morning and have a great trading day. And I'll talk to you guys and women, ladies and gentlemen, later on. Thank you.